going on, guys? Welcome back to the channel. Good to see you all. I hope you're having a great weekend so far. Let's talk about muln. Let's look at it in a little bit of a different light. We're going to look at it from the technical perspective right now because I try to bring a little bit of the fundamentals in along with the technicals just so that everybody's happy. This one's going to be more of a technical style setup, but I think it's worth watching even if you're just strictly here for the fundamentals, because it can kind of show you what's going on in the charts and what we can expect maybe to the upside, to the downside, where we are in the pattern and what's going to go on. So let's look into it. It'll take just a little bit of your time. As always, I'm not a financial advisor. This is not financial advice. It's just for entertainment purposes only, just in case you didn't know. So what we were looking at really is today the Wyckoff theory, right? The Wyckoff way of moving things that happen in the charts, why they happen. You guys know I'm a bigger Fibonacci guy than a Wyckoff. I don't use this trading strategy too often in mine trading, but we can make a lot of sense out of it, and it has a lot of weight behind it, just like Fibonacci. These guys figured out something in the way the trading processes, in the way people think, in the way the charts react. So whenever we can see it, then we like to talk about it. So really, we started to see the preliminary support of the Wyckoff theory basically happening back here whenever we could see a lot of that volume kind of starting to pick up compared to what it has been. So we could see that there was some interest that was rolling into muln. People were starting to do a little bit of an accumulation. We see it take that little hit from the preliminary support, and then you see the reversal in the RSI. You see that RSI growing, so people are accumulating, they're buying, the buying pressure is getting higher while the price is getting lower. A lot of accumulation. They want to gather as much as they can right there in those stages. So, they're trying to fill up, right? Without moving the price too much. So a lot of times we like to think, oh, the shorts. It's not always the shorts. Sometimes it's smart money trying to accumulate a position at the best possible price. So what's that mean? Well, they obviously can't accumulate everything at 23 cents because if they're buying, the price is going to be going up. So they're trying to accumulate as much as they can, say down here at the 22.5, 23 cents, while not creating too much attention, too much action from outside sources that are going to come in and drive the price up on them. So even whenever it starts getting up, they do have to sell off a little bit of that position just to keep things under control, then buy a little bit larger, sell off a little bit. That's kind of how the accumulation happens. They can't just keep buying higher and higher. They want that price. So they're buying and selling along with your shorts and everybody else that's out there. Your selling climax comes in shortly after that accumulation phase where they try to shake off just the last remaining ones. They don't want everybody taking this ride. So, the price drops down to that selling climax to a new low, scary point. But what happens? You get that spring, you get that automatic rally that kicks in. Now with muln, there's a lot more FOMO that was going on, more so than just a normal automatic rally would off of the Wyckoff theory, in my opinion. So you have that going on. They're buying along with the public and retail traders and whoever else thinks they're missing out on the run. So you get that automatic rally in muln. It's a little bit more overstated than what I would think you would see in most of your other tickers that you're applying this to. And then what happens after a rally like that? Well, you get the automatic reaction. People are up like, 200, 300% automatic reaction. I'm going to get rid of some of this or all of this, So you get that automatic reaction, which brings you back down. Now, maybe some of you guys even, made your positions free. That's okay. It's a trading channel and everybody else in the world is trading, so why not, right? Everybody should be trading. So now looking down here, we have our selling climax. Right here, I copied this over just to kind of keep an eye on it. We don't want to see a lower low out of the selling climax. That would indicate more of a downtrend to come. But what do we see? We see pretty much a retest of right at the selling climax. So we got a secondary test. We got a selling climax retest right here. Now, I don't know if we've hit our sign of strength or our spring yet. What we're kind of watching is this trading range that's going to happen in between our selling climax and what I'm going to call basically our automatic rally. I think it was realistically probably intended to be somewhere in this vicinity. So that's where I'm drawing it up. Now we could draw it all the way up to 65 cents because ultimately that's where the automatic rally ran to. But I don't think that was intended. I think that was a lot of the FOMO stepping in too. So I backed my trading range off just a little bit to about 37 cents. So I'm watching it really from about 22 and a half or wherever our lowest was, 20, 21 maybe something, up to about 37 cents as a true trading range. But really I'm looking for a retest or several retests even, I guess, off of this selling climax retest, or if it wants to drop down into the box, there's still going to be accumulation that's happening here if they can. If they think that this was a good spot and they're still interested, and seeing we didn't set a lower low, I think there's still going to be some accumulation before we hit that spring that really sends us up. But this very well could have been the point of strength. Possibly. We have a trend line here, so we're going to see if it respects this trend line, and then I guess how we respect this trading range, how much longer it wants to consolidate for accumulation, how much longer it wants to stay there, and then which way is it going to go out of this box. Now it kind of makes sense to me because of all the good news that has been coming out. I think eyes are getting on muln. I think we have some big goals ahead of us, and we'll see if they actually come into play. So, nothing's a sure thing in the market. I would just say keep an eye on what everything's doing, but this is what I'm looking at as far as the Wyckoff theory would go and how things are playing out, what's actually happening. Right now, we're looking at a rejection off of, what is that, the 100 MA. So we want to see how this trend line retest will probably happen, work out, and then where it wants to go from there. Like I said, it would not be highly unlikely to see another retest of our selling climax box down here. It could come down to 25 cents roughly, or even dip into this box if it wants to. If we see a dip below the lowest selling climax, at this point you're going to be wanting to watch for that panic spring that would send it to the upside. That would be, everybody's like, oh my, this is where I absolutely would have to get in, and it will get that spring kick to the upside, or obviously you're setting a lower low. So that would be the ultimate area I would have my intense focus on. I would definitely have a trading plan going on somewhere in the 20-21 cent range, 19-21 cent. Have a trading plan there. You can obviously do what you want, see what happens right there, see if the spring kicks in, if it does come down there, but watch how it works at the box as well around this 25 cents. So I'd be watching somewhere in between 22 to 25 cents. Also from here, we're watching our trading range, 25 cents to, I'm calling it 37 to 38 cents. Ultimately, if we get back out of there, we're getting back into our Fibonacci levels where everything kind of starts making sense again. So I can see that happening. I just don't know time frame. That's the bad thing about, in my opinion, with the Wyckoff theory. We try to figure out where these things are taking place. We try to identify them on the charts, but it doesn't necessarily tell us how long accumulation is going to happen, how many retests you need before the rocket takes off, what exactly time frame wise is going to happen. So we're just watching the technicals, we're watching the theories, we're putting them into the charts and seeing how it's respected. Setting this higher, bouncing off the top of the box gives me a whole lot more confidence, because if we would have came down with a lower low from here, then it would not have made sense, right? We could throw this theory out the window. Having a higher high gives us a little bit of confidence that, hey, maybe the theory is going to come into fruition. Maybe it's going to play out, and that's what we're just going to be waiting for. We're going to be watching for. We know all the levels. We know all the signals. I cleaned up my chart just for this video so that you guys could see everything and kind of apply it to the Wyckoff theory. Like I said, if you don't know anything about it, I would look back. Maybe it's totally interesting to you and you want to study it and look into it a little bit more, or maybe you have no interest in it. But it's one of those things that I can kind of recognize after we get into a little bit of the situation. I think this is somewhere around where our first videos were coming out, talking about muln and thinking that there was going to be a pretty nice upswing. And then, you know, we can kind of identify these areas that would kind of fall into that theory after they're happening, which is not when we want to do it. We want to do it beforehand. So if we've recognized these patterns now, then we can expect to see what happens in this trading range is what we're looking for in the future. Now, ultimately, you know where we want to be to the upside. Obviously, we need that dollar. That dollar is going to be important, and I want to see that dollar happen without any kind of reverse split. I want to see a natural dollar happen. So that's obviously main goal right now. Get back above dollar, get compliance, and then let's not worry about it. But in the meantime, we're watching what's going to happen here. Ultimately, we need to set that higher high. We just need it to happen, and it's just going to depend on how long this accumulation phase is going to happen. How long, I think there's going to be a volume cutback here a little bit. Some of the sellers are going to start giving up. Half of your volume is sellers. So hopefully the sellers give up before the buying pressure, the accumulation, the interest gives up. We want those buyers to stay in here but not get totally exhausted. We want those sellers to get totally exhausted because we don't need volume to move. Sometimes volume does help us move, it seems like, but it can only last for so long. So we just need those sellers to get exhausted before the buyers, before the volume cut back, and see if we can go ahead and break out from here. So ultimately breaking out from that 37 cents would give us a little bit higher high from our original preliminary support, which could be a good indicator that we are going to get that push to the upside. As long as we're in this trading range, we're just kind of in the trading range, waiting to see who's probably going to give out first, the sellers or the buyers. So that's what I'm watching for, guys. I hope you're having a great weekend. I hope this made a little bit of sense, maybe gives you a little bit of confidence. Like I say, always have a trading plan, especially with something that's a little bit more risky, right? We're still waiting to see how all of it unfolds. So I will catch you guys in the next one. Come back on Monday. We'll talk then. As always, stay golden, people, and may your accounts stay green.